Hey guys, Boris Schlossberg from BKT. Another week of trade behind us and some very interesting topsy-turvy price action this week that I think hopefully will provide us some insights, some good takeaways, some nice lessons to take away from this week's trading. I want to start out with a dollar-yen trade, which obviously did not work out and was probably flawed from the start. We actually were vacillating very, very strongly between euro-dollar, going long euro-dollar, and going long dollar-yen. And frankly, the only thing that made this go long dollar yen was because we were a little bit more confident about the PPI numbers than we were about the Eurozone iPhone numbers, which were coming out that day. In other words, we thought that the iPhone might be a little bit better than the market expected, but we were almost certain the PPI number was going to be hot. But here's the first flaw of analysis in this particular trade. Remember that you do not trade in a vacuum. And the story behind the PPI numbers was that we also had U.S. consumer confidence an hour and a half after the PPI numbers, something that we really didn't account for when we were doing our analysis. And we were actually very bearish, the consumer confidence numbers. We thought that was going to be negative. So you're going in on the assumption that, hey, PPI will be hot for dollar yen, but consumer confidence only an hour and a half later will be cold. And on balance, we should have never done that trade strictly for those reasons alone. We had essentially offsetting pieces of data in front of us, and probably that was one of the. And actually, when you look at the price action, it's exactly what happened. You know, we got long. The price never really rallied into our zone. It started to weaken as we got into the trade. When the PPI numbers did come out, we got a little bit of a bump, but hardly enough to even begin to take us to break even. And then, of course, the consumer confidence numbers just trickled all the way down and killed the trade. Now, we got a lot of questions about, well, when the data is wrong, why do you guys still stay in the trade? The main reason we stay in the trade is because we've learned from hardcore experience that it's very difficult to double guess yourself. Basically, even if the data is wrong, but the price action can survive your stop, that's actually a positive development. And if your stop can survive the wrong data, then you have a chance of possibly making money on the trade. Overall, we decided it's always better for us to stay with our stops. They're there for a reason, and let the market dictate to us the price action. Once we're profitable, we manage it very carefully. But if we're in a negative position, we let the market dictate to us because we already have a stop. We already have risk control in the position. Now, I want to show you the irony of life here, because had we gone long euro dollar, you'd have thought, oh, this would have been a great trade, right? But actually, probably not. And this, I wonder if it would have been a killer. So we're over here. Assume we go long euro dollar. Remember that the euro dollar had a very small range the day before. We probably would have set our stop right underneath here, right below here, because the whole idea being is that, you know, euro dollar should pretty much survive last day's trade and go higher. Here's what happened. Just before the IFO, the euro dollar actually dipped all the way down below the stop. Had we been in the trade, we probably would have been taken out, and then the thing rallied all the way up. So what's worse in many ways? Having wrong analytics and just getting taken out of a trade on wrong analytics, or being right and just having the wrong stop levels and getting taken out? In many ways, it's so much more painful to be correct and get taken out of a trade, I think. So be that as it may, those were the beginnings of the week that created a lot of turbulence, obviously, for BKT. But then as the week progressed, we really recovered our sales, and the euro-pound trade just worked out precisely as we had expected. Basically, very, very simple setup. And now we go back. Let me just go forward into the time zone here. Just bear with me. And the euro-pound trade was just, you know, beautifully executed all the way through. What we did is the following. At that point, the euro had already broken through. We were very, very bullish euro. And upcoming in front of us was the UK GDP numbers, which we knew were going to be pretty much weaker than the market thought. Additionally, Rachel Lomax, who's a BOE member, had a relatively dovish take on the UK economy, basically saying that there was going to be trouble ahead. Going long euro pound at this point was just a beautiful little trade. We got long 75.40, and as you can see, it traded in our direction all the way through. Took profits at 65 just to bank profits ahead of event risk, just to protect our moves. And then as the thing went forward, I actually tried to sell at around 75.85, a little too early. My thought was I was actually selling into strength, but of course I didn't realize how much of strength there was going to be forward. But I think there's an old saying on Wall Street, nobody ever went broke taking profits. And I think making 70 points on Euro Pound, which is equivalent to 140 points on any other trade, pretty good way to recover, pretty good way to come back for the end of the week. So that's been the story this week. I hope you guys enjoyed it. Very interesting. There's always a nuance in trading. It's never, never dull. We hope to see you next week. New ideas, new trades. Boris Schlossberg for BKT.